Hey, on away we go. Good Sunday evening to you once again, and thank you for joining. Well, we're all hanging out together. We're having our weekly Sunday communion. So, what's going on? I see we got a little bit of football talk. Yeah, hey, I am in Chicago, grew up a Bears fan, but you know what? Eh, I play fantasy football now, so I'm only rooting for individual players. But start that over. To those of you watching on the replay, thank you so very much for tuning in. And we won't be doing too much of the chit chatting right away with you in mind, especially you watching. So we're going to get right to this Dividend King downgraded, and then we can just have shenanigans, hijinks, a bit of fun. Talk about whatever you want to talk about, quite honestly. So, for those of you watching on the replay, if you want to stick around, that'd be pretty awesome after we talk about the Dividend King that was downgraded. So, if you have Simply Safe dividends, this may not be a surprise, and it was a downgrade by Simply Safe dividends. So, the stock that we are talking about right here. Yes, Spatula City. It's not Spatula City, unfortunately, from one of my favorite movies in the 80s, which is UHF. But the one we are indeed talking about is going to be Leggett and Platt. So I'm going to just kind of summarize this for you. We're only going to spend a few minutes here. I'm going to just give you you can pause the screen for those of you watching, I guess, live or in replay if you want to pause it. This is a blurb that Simply Safe Dividends had written up about. Oh, we got to change that screen. Sorry, I got to bring you here with me to do this right quick, and then we're right back into it. Okay, so either way, here we go. Leggett and Platt, ticker LEG. They are a dividend king. They've been around for about 140 years. And let me share this first. What they do, if you don't know what they do, boring company, but boring is good. Sometimes I think businesses that are really exciting carry kind of an entertainment tax, meaning that we're going to be paying up for that excitement and that story and that high flying wild growth they could have, while a lot of the boring businesses like Leggett and Platt, they kind of get that, just being a boring company, they're going to get a little bit of knock for that. But yeah, again, they've been around for 140 years, and they are in everything you sit on, and aerospace, automotive, beds, mattresses. I think it said right here they made the first bed spring. They make the wires. They make a lot of tubing, the chairs, furniture, bed frames, flooring, underlayments, laminate, vinyl. They do the fabric when you get blackout curtains. They have over 7,000 patterns. So that's kind of what they do. Again, the wire products, the machinery, just bedding is boring stuff. Maybe not what happens on the bedding is sometimes it's not so boring, but the bedding in and of itself is boring. But that is, in a nutshell, in a tubular aerospace coil modular design. I don't know. I'm just throwing random words out there. That's what Leggett and Platt does. So there you go. We've covered that. They're a boring company. And I'm just going to kind of summarize this real quick here. They were downgraded to the lower end of the dividend safety bucket to borderline safe. That yield is just sky high. We can run through some of the numbers, but essentially what it's saying is that the products that they sell, home furnishings, mattresses, couches, flooring, that's around 70% of their sales. And obviously, as we're going into what everybody expects to be a recession, the CEO has said like the residential end user of their products, the buyer, the purchaser of their products is probably going to slow down and not going to be going out looking for new mattresses and furniture and things like that. So as you know, you can see this here, pause it if you want. We'll just kind of slowly go through it. And that's essentially why they downgraded them. They did show that their earnings payout ratio is going to be about 130%. But remember, we always want to look at the free cash flow payout ratio because that is only 13%. So that's able to cover the dividend and their capital expenditures. So Leggett and Platt has a little bit of flexibility there. You know, when we see a 137, that's no bueno. That's got to come down quick. So that can't be for a couple of years in a row. But yeah, if you want, pause this, you can read. And it's just saying that they downgraded it because of the environment. the pending recession that's coming. They think that a lot of the discretionary spending on, again, those bigger ticket items, if you lose your job, you're probably not going to be going to put a new floor in your house. They do hold this. They build out these portfolios. They have one that's conservative retirees and top 20 stocks. They're not selling it yet. But yeah, it's, again, and we can talk about this. We can talk about this in the chat if you want later. But Leggett and Platt, we'll go to them really quickly and just look at a couple of their numbers because they are a dividend king. By the way, did a video on the Dividend Kings ETF, ticker KNGS. It's technically the Dividend Monarchs ETF that is tracked. So let me make sure you guys, yeah, you got, all right. I just had a random thought. Like, I hope everyone can hear me. I don't have my phone. I can see me, but you guys would have said something that would have been, yeah, I think we're good. Either way, so yeah, there it is, that 50 borderline safety score. And beta, remember beta, 0.93. If the market goes up $1, Leggett and Platt's going to go up about 93 cents, drops $1, it's going to drop about 93 cents. So a little bit of lesson there for you. But what we want to show you, dear dividend investing viewer, on this Sunday night, slow growth, 6% 20-year CAGR, 4% 5-year, 4.5%, not world beating, still should pace inflation long term. There you go, 51-year dividend growth streak, 56 years of uninterrupted dividend payments. For that, they went ex-dividend September 14th, just 2 cents. That's what they're doing, 2 cents, 2 cents, 2 cents is what you're going to expect. That's per share per quarter with that raise. So they're currently up to $1.84, but yeah, that yield 85% above the 5-year average. So it's pretty high. A couple more numbers for you there. The 52-week range at $23.84, close to the 52-week low that we just came off of. And we come to the blank screen. Why? Because if we see here, it's using up memory there. Hey, better late than never. We always like to say, right? Free cash flow. It's coming, everybody. I'm looking at the new MacBook Pro. I think I might do it. Apple, I see, has a deal, 12 months interest-free payments. So I might just do with the new M3 chip, one of the mid variety ones. So this laptop is on its last legs. But as that concerns you, not right now, there it is, the free cash flow payout ratio, which whatever we showed you apparently is wrong because this shows 52%. I don't know where that 13% was that they showed. So always be suspect of third-party data. And yeah, just there you go. Free cash flow per share currently can cover that dividend right now. Yeah, you can pause these if you want to take a quicker and closer inspection. They don't really buy back shares crazy, 136 million shares outstanding. So we don't want to see them diluting, but sales are still slowly ticking up. The ROIC and return on equity. Return on equity, that's the return you get on the shareholders' equity, what investors have put into the company, I believe is how you say it. But return on invested capital is the shareholders' equity and the debt that the company has access to. So those returns should be a little bit higher than 8%. But there you go. I'd like to know, do you invest in Leggett and Platt? Are you buying them? That monster yield that they have, free cash flow margin. So currently the last 12 months, what this number means right here, this 10%, that's out of every dollar in the last 12 months coming into the business in sales, 10 cents is making it all the way down to free cash, which they can do what with the free cash flow? They can buy back shares. They can pay down debt. They can carry it as cash on the balance sheet. They can invest it back into the business, and they can also make acquisitions, which I guess could be back into the business. And yeah, debt, 54% net debt. And then the net debt to EBITDA, meaning it would take 3.12 years of EBITDA, which, Charlie Munger calls bullshit earnings to pay off that debt. And then their interest coverage ratio kind of low. And two more things. Hang with me, and then we're going to chat here because I can't see you in the chat. My screen is what you see. I can't see the comments, but I wanted to get you a intrinsic valuation from, where am I? alphaspread.com, right? I'm like that meme with the numbers and just names and things flying around my head. $32. Remember, this is just an estimate. Nobody knows the future. $27 on the worst case. So they're saying there could be about a 14% margin of safety on Leggett and Platt right now. And one more number here. This is alphaspread.com, by the way. Yeah, look, cash 274 million and long-term debt 2 billion. So, they have some net debt there, as we did see. But the number that I wanted to show all y'all out there in YouTube, beautiful dividend investing, dividend viewing investing, whatever I call you people. What does it mean, you people? Here, this is it. With their stock so low at 52-week lows, you want to at least, see the company buying back shares, but you also would want to see insiders buying, right? You want to have them skin in the game. So there has been none as of late. And the last one, Phoebe Wood in May of 23 bought 6,000 shares worth at average price of $32.61. I'm sorry, sold. Excuse me. And we see they have 83 sales, 2 purchases. So that was the last sale. We're not going to look for that. And the very last thing, because I said skin in the game, if you go to finviz.com and you look at the black screen, there it is. This one I like. I'm going to blow this up right here. This is kind of a cool thing to check. Is the insider ownership currently at 1.67%. This means that skin in the game. Does the insiders, the management, do they have skin in the game with you? Currently, not even 2%. Yeah, some companies are a lot worse. You would like to see that a little bit higher, but for whatever that's worth, there you go. There's your Dividend King downgrade. My opinion is that I'm going to hold my shares, mostly because I'm stubborn and I'm down quite a bit. We could have took a peek at that on Simply Safe. I am down. I'm not going to show you. I don't want to say it like that, but my screen is frozen there, so whatever. Hey, it is what it is. Nice. I see some of you already talking about Leggett and Platt still losing, or leaving them. So you left the leg. I want to tell you what I'm down on, but here we go. Leggett and Platt currently, our position is down. Come on, baby. Where are you? There we go. We're down 31% on Leggett and Platt, about $1,000. We have 100 shares of them. So yeah, I'm thinking I'd like to move on, but boring if things do start to turn around. And remember, we don't know what's going to happen. And it could just be a good hold, but I don't think they're just world beaters. They're not going to, it's not a sexy stock, right? Even though they have leg as the ticker, they got leg, but it's not sexy leg, right? It's, and Edna leg over there. So what have you guys been buying? What are you doing? Dude, Chris, nice to see you home. If you're watching on the replay, maybe you're stopping. Schwab has Leggett and Platt as a B. So I think that's Schwab's algorithm, right? That's just a computer doing it, where the kind of the unique thing with Simply Safe is that it's just 3 people and they're the ones that this is all that they do. They assign the ratings and the downgrades and the safety scores and all that. It's not an algorithm. So I think that's one interesting distinction. And, maybe the algorithm is a little better. It's more cool, calm and collected, doesn't have that emotion. Do I like DFS? That is Discover Financial Services, right? I haven't really looked into them, to be truthfully and honestly, open and transparent is whatever I'm trying to say. Yeah, I haven't looked into them, but I know they took a walloping, right? As they missed earnings. But honestly, if you have a thesis and a reason for investing and you can see them recovering and being good in the future, great time to buy. Honestly, God bless my guy, Ari Gutman out there. I hope he's safe, but he always has the macro matters. And, I want to be nice about it. And I want to kind of be the anti him and say, like, to me, like, the macro doesn't matter. Like, I know he likes to talk about the Fed a lot, and we all talk about the Fed, but honestly, Warren Buffett had that. I think it was in one of the annual meetings, which, by the way, I'm listening to all of them again. I'm just doing one a week for now, so it's going to take a little while, but he had something where he said Alan Greenspan could whisper uh, who was the Fed chair at the time, he could whisper his monetary policy for the next 2 years. And Warren said, it wouldn't change a thing I do. Why? Because we're looking at the businesses and we know when we're investing for the long term with a long time horizon, this is all just noise. This is all just temporary noise. And quite honestly, the Fed doesn't know where they're going to go exactly. The market does. We don't know. We're all responding. So the only time I think it matters is when the Fed makes moves and the stocks get crushed. Great buying opportunity for some of these long-term businesses when you have that long-term mindset going forward. So I'd love to know what you think. Do you agree with Ari? Are you a macro nut? Do you think macro matters? You know, I guess if you're trading or you're a short-term investor, it can matter if you're in the bond market or whatnot. But anyway, so with DFS, we could take a peek at them in a minute here. I want to get caught up. Remind me if I forget, Mr. Kevin. Interesting. So you're getting out of the individual stocks. Nothing wrong with that. Absolutely nothing wrong with that. Again, I know some investors talk about having too many stocks is like a zoo and you're going to get mediocre returns. Honestly, my thoughts are, I know a lot of people like to compare and say, yeah, but are you beating, the S&P, the benchmark? But it's like, what if your goal is not to beat the benchmark at all? What if your goal is to maximize passive income that's going to keep growing and not get cut? It's a different game you could be playing, So I think fund managers are the ones that have to beat a benchmark to show prospective clients that they're beating that benchmark. But for us as individual investors, dude, it's a wide open sandbox. We don't really have any rules. We do what makes us happy, what helps us sleep well at night, right? That's what we do. So to your point, be still. That's awesome. And buying those, my wife and I were just talking about some family members we know. They should just buy VTSAX, put your money in that. They don't want to know about investing. They don't care about investing, but it's like, if you want to be financially free one day, you're going to have to invest. That is one of the quickest ways to compound your money, unless maybe you're going to start your own business or do something like that, or get into real estate. Whatever it is, you need to be buying assets that can compound, that have cash flow to them, which is why I got out of gold, as just so you can compound that money that comes in. And the stock market is just an incredible wealth generating machine, compounding machine. And just buying something on the automatic like a VTSAX, it's the total, right? It's the sister of VTI, I think, total stock market fund. You're buying every business. So nothing wrong with that, my friend. Matt, is that PBR? I was like, dude, Matt's already hitting the PBR, right? Dividend upgrade. Yeah, that's interesting. PBR, they are Petrobras from Brazil, right? I think the government has had a majority stake for quite some time in them. And again, I think, it makes me nervous. I'm not saying it's a wrong thing, but personally, me investing overseas with something I don't fully understand, I have a hard enough time understanding the United States where we are here. But, it's like I'm trading what I can't see and do not understand 100% for something that, I said that backwards. You know what I'm trying to say, right? Like China. I don't understand China's economy and how the government fully works and just the whole market structure over there. I don't understand it like we do here with our SEC and things like that, is what I'm saying. So I don't really want to trade what I can see and mostly understand for something I can't see and don't understand, is what I was trying to say. There you go. DN, what's up, man? You dropped leg a while ago. Snap-on, Union Pacific, and WSO, is that Watsco? I don't know WSO. Yeah, Bill, leg is a no-go. Honestly, and this is something we struggle with, right? Is that if you want to hold a position and you're not convicted in it anymore, like I am with Intel, but I'm so damned determined to get back to even and not sell for a loss. It's like there's that opportunity cost with other things, like actually imagine when Nexstar Media, which is my darling, when it was down in the mid 130s to kick off last week. Dude, imagine if I would have sold all my Leggett and Platt, all my Intel, put it into more Nexstar Media, which I do understand that business and I'm looking forward to their earnings. It was up almost 15% this week was Nexstar Media Group. So, that's what it be is what it do, Jim. Kick leg to the curb. Yeah, a lot of you guys are interesting. You got out of it. I should have paid it more attention, but this is why I love it. I love this community. I love this. I love all you guys. I really look forward to talking with you. This is one of the highlights of my week. And I used to not like Sunday nights, but I really do look forward to this. And like some of the topics you'll see may not be as strong as others, but yeah, I kind of want to get that replay, but we'll do something quick. I'm going to move through it so we can hang out here and chat. You guys can, shoot it with me. And all right, Jason, there you go. You still have Leggett and Platt. So I know this is probably hurts your ears. Like, I don't mean to make your ears bleed with me saying, so now I guess I'll have to say, when I'm going to talk about why I got out of gold, I'll just cover your ears, it might hurt your ears. There he goes. He bought hummus futures. I like it. I like it. Yeah, smart move. Smart man. How are those hummus futures doing? And you can eat it. There we go. Pat, you're buying T. Rowe Price, which that one I think is interesting because they're kind of struggling a little bit right now because when funds come out, they do a lot of wealth management, but if people are pulling assets from the market and putting it into bonds, I don't think I guess unless they have bond funds, but that's probably going to be revenue that's drying up, a little bit of revenue stream drying up for T. Rowe Price, I would imagine. But from what I understand and what I remember, pristine balance sheet, rock solid balance sheet, which is good. Yeah, SCHD. We talk about SCHD a lot. You guys know that. And Main Street Capital. Hey, shout out to the special dividend again. Like I did I tweeted out the yawn, another quarter, another special dividend for Main Street Capital. So it's just keeps on keeping on. You got to love that. Who's Kelly Nova and where can I get the email address for this Kelly Nova? Trevon, I'm joking around, man. I think you mean Kellanova. I guess if Kellanova paid a $56 dividend and the new Kellogg's been off paid a 16 cents dividend. I think you mean 56 cents. What is that? Yeah, if it paid a $56 dividend, dude, that would be astronomical. I think you mean 56 cents, right? Maybe. What does that mean for the dividend growth? I'm a little lost on that one. Maybe somebody can get me the assist here and help out with Trevon there, but we don't know. We don't know what the dividend. Oh, I think you're talking about Kellanova because they're paying 16 cents right now, I think. But they kind of were forced to do that because of the revenue that they're losing from spinning off what's going to be Kellogg. It's confusing. So Kellogg is going to be Kellanova, but they spun off what's going to be Kellogg. I don't remember the full name. Somebody can probably help that out. But yeah, good question, John. Good point, John. A little bit in the too hard pile. I'm not exactly sure what you mean. So I would think that they're going to probably keep the same trajectory on whatever their dividend growth was. It's just not going to be as much as like a nominal dollar amount, right? Oh, Jim, MFC was the big purchase. I don't remember MFC. I'm going to look it up. I don't remember what MFC. What is MFC? What is that? Oh, MFC, Manulife. Oh, that's right. They are Canadian health and life insurance. Yeah, that's cool, man. Makes me think of again, Buffett and Berkshire with the life insurance, how they invest the float. It's literally like they get money for free because they take in the premiums, and then between when they take the premium in and they have to pay it out, if and when, we never know exactly how much. That's the float, right? That difference. They can invest that money, and then whatever they gain on that, they get to keep. And then actually, what they also don't pay out in premiums, I guess, too. Like, I don't know what that's called. That's not the float. But whatever money's left over from that, they also get to keep. So it's almost like, dude, it's almost like Buffett has been able to compound free money for many years, which is just, it's absurd. It's absurd what that man has done. But that's, not all insurance companies are created the same. Different fund managers, everybody has different skills. So, but yeah, that's one of the benefits as a holding company, which is what Berkshire Hathaway is, right? Oh, dude, we went to the Christmas Story house. It was in Cleveland for my birthday last April. I think they sold it, or it might be closed. But yeah, it was cool. We got to see some of that. Good movie. I know it's going to be starting to play here, Matt. Dude, Christmas. My neighbors have Christmas decorations up. It's crazy. We're getting in the full blast. The Christmas machine is on its way. It's here. Macro, no one knows anything about. Dude, well said. I applaud, I applaud you, because that's how I feel. Like, just make some wild ass guess about macro, what's going to happen. You might be as close as some other people, but honestly, it's really not going to affect the businesses that are good businesses, and they're going to keep on being good businesses. And 10 years from now, we expect them to be good businesses. This is all just temporary noise. And that's why I said, in my opinion, the one thing it could do is create a great buying opportunity from people that panic sell, or people that are just plain bored and they're looking for something to do, like a reason to sell. Like, oh no, the Fed raised rates, I better sell. A lot of people do that. Don't get sucked into that. A lot of people chase results, and it's why we see some funds that when they go down, people pull their money out. And then when they start going back up, people put their money back in, because we're just like that as human beings. So try not to do that. I try not to do that. So any Dividend Kings companies, shares that are affordable, that's subjective, Andrew. If you mean affordable, everything's affordable. I'm just going to say this. Everything is affordable with fractional shares. I've seen a company, put it this way, if there's a stock that's trading at $1 and they have no profitability, did I say profitability? If they have no profitability and they're losing money and they're taking on loads of debt and just burning cash, I would say that stock at $1 is probably pretty expensive. But you could have a business like Markel, or like Berkshire, right? You could have a Berkshire that's 380,000, right? What is Berkshire nowadays? Do you guys know? Let's see. What's Berkshire? Oh, work with me here, Mr. Computer. Work with me. Actually, here, let me show you this, Andrew. Come with me while we do this. Let's see if let's see. Why can't I hide your comment? All right, because it's this computer. I gotta do it, folks. Here we go. Let's see if they give an intrinsic valuation for Berk. I wonder if we get the Berk A. Actually, you know what it might do? Look for Markel. Why can I not see the... There it is. Check this out. Let's try Markel. If it'll come up. M-A-R-K, right? Markel? Come on up, baby. What's Markel? Trying to think of a business that has a hard... Oh, I put market. That's... Maybe if we'd spell it right. Markel is another holding company. Here we go. Markel. Check this out now. So, Andrew, look at Markel. They're another holding company, kind of like a Berkshire-ish. They have a share price of $1,470 a share, undervalued. They say that they're undervalued. Worst case is going to be a little bit over, but it's, I don't know if we can find Berk A. Let's see. I've never looked this. I know they have the B. Here we go, Berk A. I'm sure they're going to say they're overvalued. Fair. Look at that. Here we go, Andrew. Check this out. Berkshire Hathaway, the A shares, have they have a current price right now of $533, $815 a share. And they say that they are fairly valued at $535,000 a share. That's because there's not a lot of shares outstanding. They make crazy money. So um, you can't just look at a price like $20 or that tells us nothing about the valuation of the business and if it's a good buy. Like the price on its face, you know what I'm saying, everybody? And then for those of you watching, like there you go, Berkshire Hathaway. If put it this way, even better, tomorrow morning, if all things remaining equal, Berkshire Hathaway was at $400,000 a share, people would be buying that like crazy. That would be severely undervalued for Berkshire Hathaway. Even call it 200,000. I people would be going hand over fist buying Berkshire Hathaway. And again, you could have a biopharma stock burning cash at $1 a share and forget it, forget it. So just remember that, man. That's one thing. Little bit of a word to the wise for you guys. So let's see. How many holdings would I recommend? The amount that lets you sleep well at night. Whatever you can focus on, keep track of. I'm trying to get down to individual holdings of about 30-ish. But I don't know, dude. It's all subjective, up to you. I know my guy Darth Dividend, I think he's at like 200 some holdings or something. I don't get it. But hey, if it works for him, if it makes him happy, he's meeting all his goals. That's all that matters, quite honestly. Dude, yeah, looking into macros and like predicting the weather. Macro forecasting makes astrologers look like they know what they're talking about, right? Look up ARC. Look up, they're solid. Yeah, let's look up ARC real quick. There we go. Let's go to the ARC. All right. I hope you all had a nice Halloween. My kids got too much candy. Ridiculous. We're all set on candy for the next 3.5 years, and we got candy to give them next year. Is it wrong? Yeah, Aries Capital. Yeah, I listened to their earnings call. I think they're going to be okay. I'm not worried about their dividend. They're just solid. They're tied into Aries management. So, the loans, they're still making them. People still want access to what they're providing. And they have a lot of spillover. I don't remember the amount. It was like $1.40 something, $1.50 something of spillover, I think. But yeah, we're up 7.4% on them. And we'll look at their not AFFO, I'm sorry. Yeah, only thing though, they have that high yield, but look at the growth, 2% 10-year CAGR because they cut during the Great Recession. They are yet to raise that dividend. They have a little bit of wiggle room to keep that growth streak intact. But yeah, I mean, what is the yield? The yield is currently 7%. I can't see. It says off. It could be either above or below. This is what we deal with, people. I'm just going to have to get this MacBook either this week or next or something. If you got any recommendations, post it in the comments below because this is just, there we go. I've about had it with this. So the yield is currently 7% above the 5-year average. So, almost a 10% dividend yield right now. And yeah, their earnings payout ratio still low. They can still keep that going. So let me look at their shares. Yeah, so they dilute, but the sales are still going up. And we also want to keep in mind that when you see the shares going up, you also want to have that, where am I? Earnings per share. You also want to see that going up as well. So yeah, they're just good. They're not, and that's going to be a decision you're going to have to make. 51% net debt. Interest coverage ratio could be slightly higher. I guess we'll show you. No, we don't want to look up there. If you want, and I know Aries Capital is a popular one, so let's see their intrinsic value. Again, take these intrinsic valuations with a grain of salt. This is just their guess at what they think the discounted cash flow, the future cash they're bringing in, discounted back to today, $27, about 30% undervalued, and then 5 years of negative growth. Worst case, they're saying $22, so it could be 13% undervalued. But one last thing I will show you here with Ares Capital is the ownership. This is interesting because let me make this a little, no, maybe not. Over the history of this business, there you go, 197 purchases, and there's only been 6 instances of them selling the stock. So it's been a minute since they've bought. And I love this. You always see her. Their CFO, her name is Penelope F. Roll. Penny effing Roll. you can't make that up. Penelope Penny Roll is the CFO for Ares Capital. So yeah, that's I don't know what the future is going to hold. Obviously, we can just make a best guess, and that's all it is. So I don't know. I think they're going to be fine. You know, they have most of the debt as first lien. I think you put that a slowdown. Yeah, there could be. If we hit a bad recession, it's going to affect everything, you know. Let's see. Does anyone own OC? What's OC? I don't know OC. You guys are getting me with some of these tonight. I love it. Well, I don't own OC. I know that because I don't know what Owens Corning. There you go. I don't own them. Borderline safe 60 dividend safety score, 14% 5-year CAGR though. So how about it? Do any of you guys own them? I know Kevin Burgess was buying Stanley Black and Decker. Oh my God. Yeah, right. What is that payout ratio though? That's gotta be earnings, Jim. I can't. I don't know what happened. There we go. I don't know how long I was muted for, but live, right? That's what happens. I don't know what you heard. I'm going to take you with and look at, I must have knocked something loose. I don't know. We're back now, baby. I wanted to show you. Yeah, it's frustrating. I don't know how long you couldn't hear me for, but hey, so here's the thing. The earnings per share, look how nice it just had stepped up and then just off a cliff. Negative free cash flow per share in 2022. But the last 12 months are at $4.93. And again, this is Stanley Black and Decker, which I can't move my. Hello, Ivy. It's my teenage daughter. She will not come on. Yeah, their dividend yield, 84% above the 5-year average for good old SWK. But what was I looking at there? There's your free cash flow payout ratio to the earnings. That's why that's so high. But, oh, look at a lot of nastiness with them. Just, yeah, they're still buying back shares, but ROE, ROIC falling off a cliff. Operating margin, not good. They're going through it right now. They're going through it. Net debt going up. ICR down to devastatingly low, 63 cents of operating income to cover every $1 of interest expense. Yuck. I don't know, man. That looks like a turnaround project to me. Something's going on with SWK, and I don't know what it is, but Next Era Energy Partners, Caleb. I bought them, sold out. Don't understand it. They're I personally don't understand them. So Mark still working on EPD. I should say, Caleb, I put him in the too hard pile. They made money through, right, like clean energy, finance, real estate. I think they were even into like mortgages or residential construction. It was just it was so much. They I guess in a way they're kind of like a Berkshire, right? They're kind of like a holding company. So yeah, it's too much out of my I don't understand it. This is the KLG. If they pay 16 cents, that's a 6% yield. That's probably a little bit high, I would think, for a uh, consumer staple like that with food. That's a little bit too high. Guy built up a $2 million portfolio on cheap stock dividends. Can you share that article? I mean, it's possible. I mean, he could have put $4 million into it, and that's how he got to a $2 million portfolio. I dude, I don't know what to say. That's it's possible, but I don't know what you mean cheap. Like I wish I could say like just shift your focus away from like I don't know if you mean like cheap price, like $1, $2, $5, but yeah, I don't know. Mark owns Man U Life currently at a loss. Yeah, I don't know them. Never looked into them really. I think we looked at them once at the Rick. They're playing Christmas music at the store in Florida. Yeah, I guess we go right in. So my two favorite Swan stocks. You know, there's always that caveat because anything can happen, right? Anything can happen, but I mean, yeah, I don't know what the deal is with that. He keeps saying I lose connection. Sorry, guys. I think we're back now. God, that's frustrating. Yeah, I would say Procter and Gamble. What is the deal? I don't know what's going on with this, everyone. This sucks. It keeps saying my browser lost connection, but I still see my phone. I'm still on. So whatever, we'll fight through it. I don't know what's going on. We got gremlins in the machine, but uh I don't know. Procter and Gamble, I still think PepsiCo is going to be good for a while too. So yeah, I'm plugged into my router, man. It's this, you see, you talk bad about something, and next thing you know, it just starts messing with you. Disney's going to be interesting. I don't know what to expect. Hopefully, they're going to not have as bad numbers as I think a lot of people are thinking. But I will say that if they have bad numbers and bad, guidance, I think I don't know, they might drop 5-6% in a day. I don't know. Jim, glad you enjoyed that. Yeah, I like having Sean on. I like it's interesting things. Don't agree with him on everything, but I'm glad you enjoyed that. I enjoy putting that together, and I like to keep it right around 30 minutes. It went a little bit over, but hey. If you guys, what do you guys want to know? What are you buying? What do you want to know from me? Ask, shoot, fire, shoot away. Hopefully this connection doesn't stay wonky. Oh, yeah. Dresh, good thing. Oh, park attendant. Speaking of Six Flags and Cedar Fair merged, they're going to be one now. A lot of debt. Park attendants down. I don't think I would be investing in them. And if it's under Cedar Fair, I think they're keeping the Six Flags name, but I think you're still going to get a K1, I think. So, yeah, I wouldn't. Yeah, that was a split ownership, Mountain High, of Hulu. So Comcast owned, I want to say 33%, and I think Disney owned 66, something like that. Some weird thing. So, yeah, yeah, Comcast, nice, man. I should have stayed in that one, but yeah, I'm too far behind you guys. I'm gonna get caught up here. But yes, great. Good to see that some of you understand that you cannot just look at a stock and say because it's $7, it's cheap. Because if they have no earnings and no profitability, then it's expensive, right? All right. All right. Warren Buffett said diversifications for people who don't know what they're doing. Now I'm sad. Hey, nah, I mean, we're not all Warren Buffett, obviously, but man, just take your shots. Less, maybe have your core portfolio, core and explore. You could do something like that. Looking forward to O earnings. Yeah, I think they're going to be okay. I think that was a good buying opportunity we had on Realty Income. Um, yeah, I don't know too much more. I know I gave out the couple thoughts on there, but I bought a few more shares, this week. Nothing crazy. All right, what do we got here? What do we have from you guys? Here, Aries Capital, that is affordable price, $19. Looking for anything between 9 and 10 and almost 20. Dude, just I don't know if you have like even Robinhood, but what you likely have access to fractional shares. Honestly, you could buy a Berkshire B share fractional. $5 worth is probably better than some other junk that's $15 or $10. It's just, and if you can't, I don't know. Fractionals, dude. You got fractionals. Take advantage of them. Yeah, I hear you guys. Sound, sound, sound. I lost sound. I know it's like, see. All right. There you go. Good. Yeah, I'm catching up to you guys. I know. I don't know. On my end, I got a little pop up and it said connection lost. Anyway. United Health, they're solid. They're good. They are going to be okay. I mean, unless the government went to a single payer system, which is always a threat. But yeah, Sean, the millionaire dividend portfolio investor, he still buying United Health. So I know it happened twice, so I'm getting through the lost sound. I know. There I am. Oh, I don't know. Jim, you know what, man? That could be. I don't see him down here. Usually doesn't come down unless nobody else is home and he needs attention. But yeah. I don't know what knowledge. Dude, I'm just sharing stuff I've read and learned and a little bit of experiences of my own. So yeah, no, it's the internet connection. So it just flickered for a minute and then it puts my mic on mute for this. So I don't know. Yeah, I got you, man. I understand. For the guys of you that left. All right, let's see. Oh, I'm sorry, I was reading this again. I didn't know if you ever sent that link. I don't know who the $2 million is. It Timothy Sykes? Maybe he did. Hey, people have gotten rich on penny stocks. Good luck. You could try it. I mean, there's penny stocks that are 0.0001 cents a share. You could buy 1 million shares, and if it goes to a buck, you're a millionaire, right? That's probably not going to happen. Yeah, I know. I should do some more shorts when you're driving to work on a job. Oh, yeah, I don't know. I could. I kind of put the shorts on the back shelf so I could focus on putting together better content. I know I was doing the dividend payments I received, which they've kind of been sparse here these last few weeks. That's fine, but Arc under 18. I'm caught up to you guys. I'm lying. I gotta get so much better at this. I really do. But yeah, Arc under 18. I would like to buy more there too. I did buy it in the taxable account at like 1767 or so. But dividend news. We didn't do dividend news. I got caught up. So yeah, Andrew, dude, I agree, man. I don't know what to say, but I think B still's kind of right. You should I don't know. You got to stop just looking at the price. And I know it's hard. But we have fractional shares now, so we can take advantage of that. So everybody come along with me to the world of, let's look at I should have got this going sooner. Hopefully everything will cooperate here. But let's do dividend news. We had some news. a little bit. Come on, cooperate. Do it. Do it. Look at this. As we wait, hit latest, and it will take us to the land of the spinning. Hey, look at that. I usually get this set up for you guys. I go down to like the 30th now. Let's see. Yeah, it's time. It's time for a new computer. Look at that. We got a lot here. All right, this is going to have to go quick because we'll be here all night. There was a lot of, I think I'll just do the dividend payout ratio, the dividend increases. And if you want to read anything more, any of these, feel free. I'll stop for a second. Yeah, they've reaffirmed, VF Corp, they cut that dividend, right? Ugh, yuck. Bucket of yuck. Spirit Realty being acquired by Realty Income. That was the big news. Talked about Leggett and Platt. This is going to need to go smaller so we can fit it all on the screen. Huntington Ingalls, they are a ship builder. They raised their dividend. Health Peak is going to acquire Physicians Realty. Refresh the outlook on KHC. We said we're just going to do raises, so I know we're toward the end, but there you go. Canadian Natural raised the dividend 11%. ConocoPhillips hiked 14%. Snap-on, there it is, dude. Snap-on, so solid. Raised that dividend 15%. Just great. I'm so glad I have exposure to them in mutual funds, but I should have kept building that position outright when they were around 210, 220. See, there you go. They were cheap at that price. EOG raised the dividend 10%. I don't know if any of you are in EOG. Aflac, not going to do the duck. Not going to do it. 19% dividend hike. That's their 41st. Really nice compounding from Aflac. And they had been raising it for, I guess they did go quick there, 33 to 4. Anyway, so Aflac, and then last, TELUS raised that dividend 3.4%. I think this is our last one, which was just a Simon. Oh, and then there we go. The Main Street. There we go. They declared a 27.5 cent per share special dividend. We're going to get $41.25 from that. And I don't know if this will come up in time. I was going to show you their recent history of dividend increases, but this bugger is just, you can't hear it. It sounds like my laptop's going to take off. The thing is just, I give up. Anyway, it ain't happening. It's because StreamYard, because I'm streaming and it's using so much. Forget it. Anyway, they have like five quarters or so, I think, of special dividends. It's a lot. Good. I still got sound. Fantastic. Fantiddly-tastic. What are you guys watching? Tell me something you're watching. What's a show? We just started watching Bodies. I want to do the end of these. Anybody watching? Just anything. A podcast you listen to, you really enjoyed. TV show you're watching. Series. I don't care what it is. I totally ripped this off from The Compounded Friends with Michael Batnick and Josh Brown. At the end, they call it favorites. And I just think it's a really cool way to end. They'll say, just what's something you really like right now? Anything. Book you're reading. Show you're watching. Something fun. Something just not even dividend or just investing related. It can be, but this is what I'm doing. I rode my bike today to the Woodridge Library and got the Snowball. I mean, dude, look at this. It's like 930 pages. I got the audiobook. I'm waiting on Libby. 2 people ahead of me, so I can't wait anymore. And I'm going to start reading that. And then also picked up this Dale Carnegie book from the 1940s, How to Stop Worrying and Start Living. So I got reading cut out for me for quite a while. And, dude, nice to see you. This is my guy. He grew up in the south side of Chicago. I was Berwyn area. He grew up by Midway. He's in Korea now, so I hope all is well with you too, my friend. And Wind River. What the heck is Wind River? Isn't that funny? My initial thought was like, that sounds boring. Like, it just sounds like some nature show, crickety old porch, people hanging out. Like, I don't know. Morningstar's Monday morning briefing. I've never watched that. I may have to watch that, Jim. Thank you for sharing that. Oh, nice. Mark, well, we're reading it together. We're gonna have to have a dividend book club. Yeah, I'm not gonna lie. I didn't know how big it was. I saw it on the shelf. I was like, oh boy, like let's get ready. We're gonna have to. I had to do a couple squats to limber up before I picked that book up, and I want to throw my back out and hurt myself. Good. This was a really good book. The Subtle Art of Not Giving a F by Mark Manson. Very good book. I really enjoyed that. And right now, I can't summarize it. I just remember that I liked it. I may have to read that again. I listened to it on audiobook. Fear the Walking Dead. Nice. That's still on. Atomic Habits. Oh, the Master Class. Very good. I don't know what that is. What else do you guys want? Bill Nye the Science Guy reruns. Hey, the bow tie guy. And the Bills Bengals game. I guess that's fun. Good. I love it. It's just a part of our community. Like, yeah, we invest. This is what we do, but you got to unwind. And this is what I do. As soon as I hang up with you guys, hang up. Wow. That just showed my age a little bit. As soon as I hang up this whole live stream thing with you people, yeah, my wife and I, we watch TV for about an hour, wind down, get ready to start the week. And we got to do it. You got to take time to relax. You're going to burn your little brain out. We don't want you to burn your little brain out, right? So any last things you guys want to say? Any last question before? I've never read the All In Pod. Thoughts on these two key tier 1 internet service providers, AT&T and Verizon. We have Xfinity that's Comcast, right? So CMCSA in the house. What's up? I've never used either AT&T or Verizon as an ISP, but yeah, we use Xfinity, and maybe that's not a good sign that my internet was on the fritz. But hey, yeah, Comcast looks solid. Very, very nice stock. Should have stayed that. Ooh, pumpkin beers, Bender. I don't know. I've never had a pumpkin beer, but it sounds gross to me. If Maine had a slightly higher dividend payment, you would have bought them by now. Slightly higher? Dude, that's like, what is Maine? I don't know if it ever came up. They are at 7%. That's pretty damn high, I think. To get a safety score of 62 safe as well. That's high. I think that's high. Anyway, that's my opinion. Some people, that's, pretty low. So, vacation, nice. Blueberry Cafe. I don't know where that is. Forest Park, maybe? But yeah, we don't want to get to. We'll lose everybody. The only other thing I wish, if anybody, I need to find a way to get this screen up here because it's the strangest thing. I have to read comments and look down in that. So anyway, those are problems of, this guy. Here we go. AMT's 20% increase. American Tower, solid. I think they're in a good business that they're kind of like the picks and shovels business in a way, right? Like they just have all the competing companies throwing their stuff up on their tower. I mean, oh, interesting. That's out by me, dude. I'm not too familiar with it. I can't think of it. But yeah, AMT. Yeah, I think the cell tower is a lot better place to be than like a Verizon or an AT&T, and still hanging on to AT&T. I'm just so damn stubborn, and I don't know. It feels like we're never going to see the 20s again for AT&T. I mean, it feels like it's a Herculean effort to get them up to $16 a share right now. But there you go. That's a perfect tie-in to kind of start landing the plane. AT&T, $16 a share. Some people may say that's expensive. Others may say that's a good deal. But I don't know if you're talking about retired. I'm not retired. I don't know. Yeah, I think a lot of us are holding T, and maybe that'll be that's a different topic for a different day. What are you doing with T? Well, I guess I spoiled it, but we'll get more people in. Yeah, I understand, and again, I have a sunk cost fallacy in full effect here. I'm like, I just don't want to take that loss because I have that feeling, and I'm sure a lot of you have felt this too. It's like I know as soon as I sell AT&T the next day, something crazy is going to happen, and they're going to pop to like $25, or they're going to go up like 60% in a day. I don't know, but anyway, I don't know what to do with them anymore. What are you doing with your tea? We'll talk about it next time. So, you know what? No, we'll leave it there. We'll leave it there. I love it, but and I love you guys, and I really do appreciate this. I look forward to every Sunday night hanging out and talking with you guys. I was a little tired coming on, but I literally do get a burst of energy talking with you guys and knowing that you're on. So I really do hope you have a good week. I hope everything goes well for you. Pee Wee is going to take us out. The late, great Paul Rubens. I don't care what anybody says about him. I think the man was a genius. I love him. Didn't do anything too illegal. So, hey, you know what? We all have our picadillos, right? But anyway, I love you guys. And thank you for stopping on by once again and having a little bit of Sunday evening communion with us. And I will see you guys next week and in the next video. See you guys later.